Hello, and welcome to 2021's first installment of Tuesdays with Lloyd's, an ongoing virtual series of conversations with Lloyd's underwriters and their distribution partners in London and the US. My name is Pat Talley, Regional Director and Managing Agent Practice Group Leader in the US. First, let me say how pleased we've been with the reception these events have received. Since its launch last September, we've held 9 sessions covering a broad array of topics, all designed to provide fresh perspectives on Lloyd's priorities, classes of business written in the market, and new risk transfer solutions. Sessions have averaged an attendance of over 350, and as we kick off a brand new year, we're happy to say we have had nearly 750 RSVPs for today's session alone. We are committed to continually developing the program during 2021, and we welcome and encourage your input. Our foremost objective is to provide you only with the most compelling topics, consistently delivered by experts in their respective fields. As a first step, we're pleased to introduce a new monthly segment we're calling Syndicate Showcase. Once per month, we will welcome top executives from a syndicate's senior leadership team to share their perspective on a variety of relevant topics and provide you, the audience, an opportunity to ask questions. So this is your chance. Today, for our first Syndicate Showcase segment, we're very pleased to be joined by senior representatives from Apollo, which manages Syndicate 1969 and Special Purpose Arrangement 1971 at Lloyd's. Joining us from Apollo are CEO David Ibeson, Matthew Newman, Group Head of Casualty at Apollo 1969 and Active Underwriter for ibott 1971, and Chris Moore, Head of ibott and Deputy Active Underwriter for ibott 1971. We've included a brief biography for each of our guests in the chat box for your further review. Our moderator for today is Hank Watkins, Lloyd's Regional Director and President for the Americas. Before we begin, a few housekeeping details. We encourage you to submit questions, though we ask that you please use the Q&A function instead of the chat feature, as it makes it much easier for us to stay organized and ensure we address as many questions as possible. To help with content development, we like to get a sense of our audience demographic. So if you would, please take a moment to answer the poll question we just posted, and we'll discuss the results in a few minutes. Today's session is being streamed live on YouTube and will be recorded. If you like the show, feel free to let your colleagues and clients know that they can catch it later. And with that, Hank, the floor is yours.
Thank you very much, Pat. I appreciate the introduction and welcome everybody to our first Tuesdays with Lloyd's of 2021. We're thrilled that you're with us today. I just wanted to briefly run through what the Americas team of Lloyd's does on behalf of the marketplace here in the US, Canada, and Latin America. We're involved in the day-to-day regulatory affairs and tax advice that the market needs across the entire region. We also provide a lot of market development assistance to them. And one example of that is Tuesdays with Lloyd's, where we basically pitch up a couple Tuesdays per month with different underwriters and in some cases brokers from the Lloyd's market to give you an opportunity to get to know them much better. You know, we decided to do this back in the fall of last year when we realized that we probably weren't going to be face-to-face for some time. And it's worked out brilliantly. And as Pat said, there are several hundred people signed up today. We did put a poll up, but I don't really see the results here. So I'm just gonna drop this and suffice it to say, I've looked at the attendee list. Oh, there it is. Thank you, Mark. So we have a large cross-section of Lloyd's stakeholders in the US, Latin America, and Canada with us today. We have risk managers, which are the customer at the end of the day of the Lloyd's market. We have retail brokers and wholesale brokers, as well as cover holders. They are key distribution partners. Lloyd's is a broker market and relies very much on the retail and wholesale partners in the US, as well as the cover holders who are MGUs with binding authority with Lloyd's syndicates. And then we have a fair number of underwriters as well. So with us today, as Pat introduced, is the team from Apollo. It's a very, very interesting background and history that Apollo has, and they're one of the key managing agents that we have lined up this month on this series. So I'm going to ask David Ibeson to give us a sense of the history of Apollo. It is fascinating, particularly for those who were around in 1969, as I was, to have seen where this whole concept began. Thank you, David. Please take it away.
Hank, thank you. Good morning or good afternoon, wherever you're you're logging in to listen to us. Yeah, the background story to Apollo. It is fascinating. Unfortunately, I can't claim it's my story because I wasn't there, but it is the story of the business. So Jim Hayes was is our founder backer as such, was a personal friend of Neil Armstrong. The founders with Neil, Jim, and Lloyd senior management were having a meeting in the Lloyd's building, and one of the Lloyd's teams suggested that maybe 1969 was an appropriate syndicate number, with Neil Armstrong being a backer of the syndicate right from the beginning. It made sense, and at that point, Apollo 1969 was born. It's quite ironic or relevant that the naming was effectively a team approach. I think you'll hear on various our comments, if we talk about Apollo, partnership is a key theme that is sort of at the heart of everything Apollo does. So when ibott was formed, 1971 became the logical number. 1971 being the first year an electronic automated vehicle drove on the moon, the lunar rover, carrying on the theme of space from the beginning with Neil.
Thank you, David. And ibott stands for Insuring Businesses of Tomorrow Today. And Matt Newman and Chris Moore will get more into that in a couple of minutes. But I wanted to briefly just ask David about the capital that is behind Apollo's underwriting. Many of you in the audience will know that Lloyd's has capital sources from all over the world. A large chunk of that is corporate capital, and that essentially is insurance and reinsurance companies who own syndicates. A wide variety of US-based and Canadian-based insurance companies do have Lloyd's syndicates. It also comes from pension funds, private equity firms, and there are even individuals on a limited liability basis who can still fund the underwriting of Lloyd's syndicates. ibott is a third-party capital syndicate. Apollo more broadly, Apollo Group. And David, I'd love to hear your thoughts on the advantages of that for you.
Well, I suppose I can start with the fact that Matt, Chris, and myself are in fact names on our syndicate. So yeah, we totally get the different flexibility of how to apply capital at Lloyd's. But the advantage of third-party capital from our flexibility. Capital have different appetites. If you take our three syndicates, you've got 1969. It's a specialist syndicate, and as you said, it appeals to reinsurers looking to access the insurance market. 6133 is a cat syndicate. Appeals to balance their portfolio. Maybe they've got different territories with some cat appetite. And 1971 appeals to those interested in innovation and clearly has little cat correlation, so is relevant for a number of investors. From my perspective, backer means one appetite. Multiple backers mean multiple appetites. So we compare product with capital. So our result is a greater range of products and increased opportunities for capital, and therefore for us to recruit underwriters with ideas for that capital. And the opportunities with third-party capital, it's not just capital, but they're also our partners. Capital backers often develop into co-insurance or reinsurance arrangements with our clients. So we add more value to capital and clients than just getting the capital from them. So within the Lloyd's environment, I would say that the structured party capital benefits clients and capital, but it also gives entrepreneurial underwriters a way of building an independent London business like Apollo.
Thank you, David. And now we'll take it over to Matt. Matt, give us a sense of some of the challenges that are around that being different, if you will, the differentiation that Apollo brings as a result of all their different capital backers.
Yeah, thanks, Hank. I suppose the main challenge in thinking differently and being different in that is really keeping and building that trust and confidence. And that trust and confidence is of your backers, your capital providers, Lloyd's, management, and your clients. So that's the real key. You've got to demonstrate that you're backing up your underwriting decisions with data, statistics, to keep building that confidence. You've got to show a strong knowledge of the subject matter, show you keep learning, keep evolving, and fundamentally really understand what your client needs. What do the client want? Not really what you can offer. What does your client want, and then evolve it backwards, backfill into that, but into where you're going. And I think we'll hopefully come on ask some questions on that later. Build over time, build conservatively, build your USPs, make sure they're working, and that sort of starts a circular momentum of confidence, trust, and reputation, which then continues on. And that's probably the biggest challenge. I suppose not really a challenge, but we're quite lucky, and David talked about our capital network. We're quite lucky we can differentiate ourselves with that, a network of aligned partners. Now, a lot of them are capital, and what I mean by that is you have people that are aligned in wanting the syndicate to achieve profit, achieve its the ROEs. So using that network around the world, we effectively can tap into those capital providers and basically use their resource locally to add our expertise, either maybe as a reinsurer of them all around the world. So we effectively grow a network, and that's with in a lot of the business sectors we're in, has been a massive USP and growing. And actually it's not just capital providers. We've got other insurers that we partner with. We've got reinsurers that we partner with, and that just accelerates innovation and on both sides. Combining USPs from other people means that it sort of works for both parties. So there's no reason why we wouldn't do it. I think that's probably would be my answer.
Thank you, Matt. And the conversation around capital differentiation at Lloyd's is really important because the market itself is rated A or better by S&P, Fitch, and AM Best, and that's a critical point for any of you on the audience. Of course, the distribution partners will need to have that strong capital behind them. Policyholders, of course, demand that. So I just wanted to get this conversation up front because even through the challenges of COVID-19 last year, with the Lloyd's market probably at the end of the day paying upwards of $5.5 to $6 billion globally, there is still a vast amount of capital supporting the market, and our ratings continue to be very strong going into 2021 and beyond. Matt, quickly, you mentioned partners. There may be some of the audience who are still wrestling with whether or not E&S is the right option for their client. Some policyholders still are more comfortable with an admitted option. Can you tell us how Apollo was able to satisfy that?
For us, we obviously, client decides with the broker the route they want to go. So and what works best for them. For us, we want to make sure we have an answer to whatever direction the client wants to go. So for us, we partner with a big US domestic insurer, and we can effectively, they would issue paper, they issue their licenses, and we reinsure them and go into a partnership with them, which has just worked fantastically well. And it just gives us, again, we are a partnership model, and you'll probably hear this theme quite often. We like partnering with other people. We feel it gets us to market and gets the products that we want to deliver quicker by partnering with other people. And if you're easy to partner and you have a track record of partnering, it brings on more partnerships and it works quicker. It's more efficient, and so that's the way we do it.
Excellent, thank you, Matt. And that's a perfect segue into our conversation with Chris, who is here on behalf of a lot of lines of business that Apollo writes. But for this next question, we're going to talk about the gig economy, the sharing economy, as many of you know it. And this is just a perfect example of how the Lloyd's Corporation colleagues in the U.S. have partnered with Apollo over the past several years to help them expand that awareness, if you will, across the space here. Chris, I could talk about this for 20 minutes because we don't talk about the success you've had with the sharing economy, but it's all yours.
Yeah, sure. So I suppose I'll talk about how we came to launch it, really, and it's sort of born out of the sort of philosophy that we had within Apollo, and it's always been client first for us. And I think if you think client first, everything will follow from there. The business landscape that we're seeing is evolving at such an unprecedented rate that our products and services have to change and have to constantly adapt to meet those changing clients' needs. And we've seen the rise in huge captives. We've seen companies like Tesla talk about creating their own insurance companies because they believe the insurance industry is ignoring, the change in risk landscape of their business and not evolving and creating innovative solutions to solve it. And I think we were aware of that at Apollo, and we knew that the insurance relationship had to change from a transactional one, where you speak to your insured every 12 months, to one of co-collaboration, to one of partnership, to one of constantly speaking about the evolving risk landscape. And it was about moving away from just talking about risk transfer, but to talking about the whole spectrum of risk management. So risk avoidance, risk control, and really creating a complete solution. So with that in mind, when we were presented with an opportunity to look at a sharing economy platform's risk in 2014, it was certainly a challenge, and that platform had the insurance doors slammed in its face at every turn, and just could not find a solution. So we took that on, and it was a lot of hard hours across multiple divisions within Apollo to create that solution. But proud that we created something that was completely unique product, completely innovative, and also proud to still call that sharing economy platform today a partner of ours. They are still an insured of Apollo's. Once we had created that solution, it turns out that Silicon Valley is a lot smaller than I thought, and we saw a huge amount of companies approach us and say, hey, if you can create a unique solution for them, then boy, do we have a challenge for you in the subsector of the sharing economy that we operate in. And such was the opportunity, and people will read in lots of different reports, whether Lloyd or PwC, about the growth potential in the sharing economy, the gig economy. We decided to launch, in partnership with Lloyd, an SBA in 2018, just because we wanted to be dedicated and focus on creating more and more of those unique solutions for this this growing need, this growing economy. So that's how we came to launch. But I think it speaks a lot to the culture at Apollo.
And it also speaks a lot to the opportunities that distribution partners in the audience have. Everything's shared these days. And there was a time when only so many people will get into a stranger's car or rent a stranger's home or vice versa until insurance came along. And that solution now has really vaulted that whole segment of our economy to heights they would never have expected before. So anybody in the audience who's thinking of ways to make a difference, get a hold of Chris, get a hold of Matt, and figure out how you might expand your career through a very specialized area that is certainly
absolutely. It's certainly still an underserved area, Hank. And there's some great conferences now. Marketplace Risk is one of them, where there's a lot of information for brokers and clients if they want to understand more about the risk solutions in the sharing economy. But yeah, certainly a big opportunity still today.
That's a great point, Chris. There's a conference for everything in our industry, right? And it's typically in May in San Francisco. It was virtual last year. 2 years ago, the Lloyd's, our Lloyd's colleagues in London, and Chris and his colleagues and a number of distribution partners in the marketplace hosted a 2 or 3 day Marketplace Risk Europe conference that was very well received. So this is going strong. We're really excited about that. Thank you very much, Chris. Now we'll go back to David for that perennial "what keeps you up at night" question. Clearly, 2020 was a major challenge for so many people in this world, and we're continuing to live through it. Just love to hear how Apollo adapted. Our industry was blessed with the resilience that we showed right away in March and April as things turned pretty bad for a lot of people. What did Apollo do? And then, as importantly, what are you looking to do in 2021 to keep that momentum going?
Yeah. I think when we talk about challenges, it would be inappropriate, as you say, to talk about insurance challenges compared to the challenges experienced by frontline health workers or other industries. And whilst the insurance industry has its problems or has had its problems, they're relatively insignificant relative to the challenges that the world is experiencing at the moment with COVID-19. I suppose the business adapted really quickly, and we went 1 week from being in the office to the next week we're working remotely. So in terms of adapting, the key has been sort of the having agile and adapting staff, and I'm proud of the way they did. We went from going into Lloyd's to servicing the brokers online. So I think for us, 2020 worked quite well. We wrote more premium income. We wrote the year before. Things are ahead. Rates are up. Clients hopefully improved client engagement. Maybe we'll talk about that later. But for me, the challenge, as what keeps me up at night, sort of the main challenge I think we're working on is staff. The staff are key. They're key to delivering the product to customers, client engagement, insurance products, paying claims. So keeping them going is absolutely key. I mean, the strain of delivering from home in the climate. We have parents that are trying to work and homeschool at the same time. Fortunately, my children are well into their teenage years, so they look after themselves. But we have people that have young children whose schools are expecting them to educate them during the day, whilst actually trying to deliver work for us as well. We have other people that are living, sleeping, and working in their bedroom. And clearly, the strain on people in that environment is enormous. One of the things that's not worrying me, I mean, we spend a lot of time carrying out oversight and controls in connection with underwriting. So I feel underwriting is well controlled, and we're working hard on making sure that staff welfare isn't an issue. We have bi-weekly surveys, weekly team meetings, one-to-ones. So it's something that we're constantly working on. When you ask me that one question of, well, what is it that keeps you awake at night? It has to be, unfortunately, going back to COVID-19. It has to be that the virus evolves, vaccinations don't work, or there's not sufficient take up in the vaccinations for the world to get on top of the virus. The consequence of that being, not just the economic impact, but sort of just more locally sitting there and going. So in the UK, as I'm looking at the business in the UK, us being London based, is that this won't be the last lockdown, and the strain will increase further.
Thank you for those comments, David. And underlying all that is, of course, technology. We would not have been able to have this conversation even a few years ago in a very effective way with so many people out there who might not have otherwise been able to be this close to us. I'm actually sitting in my wife's office in the conference room because 2 hours before I went on at home today, the internet went away, first time in a year. So I scrambled, here I am. So please excuse the noise or the cars going by, but we all adapt. And as you said, colleagues around the world are challenged in so many different ways, as are their clients, but we're all doing our best to take care of everybody's wellness first, and of course, deliver our products and services as well. I want to quickly talk about Blueprint 2, which I'm sure most people in the audience have heard about, and certainly in the London market, it's a big play towards making Lloyd's the most advanced marketplace technologically going forward. We were fortunate back in April when the first renewal period came around after lockdown to be able to transact business 100% electronically. And as the year progressed, of course, that got even smoother. So here we are in 2021. The underwriting room closed for the second time in January because of the lockdown. We're all thinking about what that building looks like going forward. There are currently 4 floors with boxes, as we call them, right? Through which thousands of brokers and underwriters and risk managers and other friends of Lloyd's go every single day. I'd be probably a little skeptical of seeing that the same going forward, but that's okay, right? The place has to evolve. EC3 is evolving. This is really for any one of the three or all three of you. How do you see EC3 and the Lloyd's building, which is the center of it, looking at the end of this year and going forward?
Yeah, I'll have a quick go. It's been part of our lives since we joined the industry, so it's very personal. Yeah. But Lloyd's been pushing electronic placing targets for some time before lockdown, which with hindsight was perfect timing. So actually, that made a transition a lot better. I think probably for all syndicates. We employ underwriters with a lot of experience and a lot of relationships in the market, which also helped. So in that lockdown environment, people are phoning a lot of people that they know extremely well. And again, that's happened. Blueprint 2 and that drive for electronic trading, that all of that combined is just helping that transition to make it a hell of a lot easier for all of us. I think the big challenge at the moment is certainly the lack of personal interaction, and that's not just an insurance issue. Obviously, it's for all of us who are in lockdown on a personal level. The room Lloyd's was great for those chance meetings where the broker needed to finish a placement, where the chance you bump into someone, you see them, do you want to have a look at this risk? That opportunity has gone. So therefore, at the moment, we have to deal with it in an electronic and in an online Zoom format, and so that's one of the challenges. Yeah. So, but I think going forward, the room will evolve, and we will see what that is. But there will be a need for interaction, electronic, and as risks are very complex, becoming more complex as time goes on, there will need to be that personal interaction will remain very important.
Yeah, Hank, maybe I'll just chip in at the end of that. I mean, we're not designers, so we can't work out exactly how the room probably is going to look. But I think we'd all agree that the creativity and innovation of face-to-face interaction is clearly key to service the clients. One of the things I'm very proud of is that working in the Lloyd's market, I've seen it evolve and adapt many times. And I'm sure that whatever the room ends up looking like, sounding like, or feeling like, it will evolve for the better. And I mean, we talk about this at Apollo about what does the working environment look for us, and a year ago, no one would have thought we'd all be working from home. Now we're all working from home. We had a conference in the summer and said, well, what does that mean for the future? And I think pretty much people were saying, well, I quite like a couple of days working from home. That lets me get things done, and Zoom does work, and we can keep in touch with that. So I think for me, I don't know the answer to your question as to what the Lloyd's is going to look like, but I'm sure that face-to-face contact, innovation, brokers, those elements will remain, and Lloyd's and London as an important centre will also remain. So,
I think I'll just chip in at the end then to complement the whole three. But I think there's one thing to say about the role of technology in allowing us to, reduce expense ratios, trade electronically. Absolutely, we're now seeing algorithmic underwriting being talked about, again, all powered by technology. But I think in addition to, looking insular as an insurance industry about what technology can do for us, we also need to think about, this rapid advancement in technology and what that can do for our clients and the products and services that we need to give our clients. So a good example of this within the sort of sharing economy space is a lot of our, the wheels related risks, because they have technology in the vehicles, whether it's telematics or GPS technology, they're able to have really accurate sort of exposure metrics in terms of miles driven. What that allows an insurance industry to do, and companies like Apollo and others in Lloyd's, is look at now creating usage-based insurance products. So rather than that classic, I'm going to buy an auto policy that's 12 months long and speak to you in 12 months' time, now we can create a policy that's not based on the number of vehicles you have. It can be based on the exact accurate number of miles that you're driving or the number of deliveries you're making. And it's a much more accurate and much more granular reflection of the exposure at hand, which allows us to model it in a way that's more accurate, right? So taking away some volatility and uncertainty, and hopefully with a good partnership with your client, you can create a long-term mutually beneficial relationship, which is what we all want. I think one of the things that we need to do as an industry, and certainly we're passionately looking at this in Apollo, is we need to increase and enhance our data capabilities. because future businesses, and no more so in the sharing economy, are data-driven businesses. So we need our underwriting to be data-driven. It has to be able to respect that technology. I read, that for future businesses, data is not just important to their business. Data is their business. And if we don't respect that data and the ability to absorb and use that data, how can we insure them? So I think technology is important across the board. And like I said, we have a big challenge in keeping up with the rapid speed of development of our clients.
Very well said, Chris. And you look at the Lloyd's market, it's a $50 billion market for insurance and reinsurance. And you can only imagine the amount of data that goes through there from every type of risk in the world. So we have it in that EC3 environment, and it's up to us to utilize it in a much more effective way than perhaps we have in the past. David was talking about the face-to-face. Lloyd's, the corporation, is building a virtual underwriting room. It's currently lined up for property, but there could be a time when, the risk managers in the audience, rather than coming to London, perhaps this year, can queue up with their broker and have a seat at a box of a virtual underwriting setup. So, we're doing our best to keep that going until we are all back together. So I just want to switch quickly here to at what your business plans are in the U.S. for 2021. Maybe we've talked about the sharing economy. Are there some other classes of business you can broadly talk about that you're interested in the U.S. market?
Yeah, I mean, maybe I'll pick that up as just on a general basis. We write a broad spectrum of business out of 1969, 71, and 6133. Our business plans actually, I don't know how many people are familiar, but we agree the 2021 business plan with Lloyd's actually in September 2020. So what we've done is we've agreed an increase. We have an increased appetite pretty much across all of our lines. The specifics as such, it's probably best to say, you can go on our website. We have access to our class heads. If anyone has any specific questions, they can ask them. But across the board, we see 2021 as an opportunity to grow and increase our appetite.
That's great. And Lloyd's established a product innovation facility about 2 years ago. There are 24, 25 members now. Apollo is a member of that group. There's over 150 million pounds of capacity sat in there. Would Matt or Chris like to talk about perhaps from an innovation, new perspective view? What are you looking to do in the U.S. this year, or more broadly globally?
Well, yeah, I think quickly picking that up. Lloyd's also has set up an innovation class, ICX, where effectively, which feeds into that, which is effectively where syndicates can allocate. They sort of apply products, but they can allocate additional 2% of their income towards new innovation products. So that's great, because that's setting up an environment where we can all put forward ideas internally. We have about 8 or 9 current projects or ideas that we're working on in that ICX class, which we're putting forward. Some of those are fully internal Apollo ideas, and others are collaborations with other Lloyd syndicates. Back to my earlier points of partnering. If we've got something and someone else has got something we don't have, why not partner it to make it better? And so we've got a few of those going on. I know we've got a number of those are in ibott. Might be worth Chris jumping in to talk about some of those specifics.
Yeah, sure. I think we're pretty passionate about the message of do not innovate in isolation, because it typically doesn't end very well. It's about collaboration. Again, I think all of us have said the word quite a lot, but it's a word that we're passionate about in Apollo, of partnership. And so we like to partner with our brokers, partner with insureds, and say, what are the challenges that you're facing from a risk perspective, and can we create solutions? And we might not be able to create the solutions just with Apollo, but we've got a huge diverse appetite within the Lloyd's market that we can all collaborate to create solutions. And I think the PIF, the Product Innovation Facility, is a great example of that. It's about when a risk is really challenging, can we come together? Can we syndicate a placement, which is what Lloyd's is, a steep history in, to create that unique solution in partnership? And the ICX Glasgow, like Matt said, is another great sort of venture from Lloyd's to try and push allow syndicates to look at new products and have the freedom to need to tweak them and be dynamic and agile. Our clients are exhibiting huge amounts of agility in the times of COVID. And we also need to be agile with how our products and services tailor to those needs. So, within ibott, what we're seeing in the sharing economy is a growth in micromobility. So e-scooters, it sounds on the surface of things like a very challenging risk, but if we can invest the time, understand the technology, understand the risk controls in place, we can potentially build a product there that is fit for purpose, allows them to operate safely, and is a bit more dynamic and like I say, usage-based. Another product we're working on is risk-based routing. So it's not always about a product that's going to always be selling and be more profitable. It's about how can we control risk as well. So if one vehicle, whether it's doing a delivery or a ride share, is going from point A to point B, can we use the data within the insurance world that we have on which roads exhibit more accidents, which roads are known to have a higher frequency of accidents, and can we make sure that the route taken from A to B is the safest route, not just the quickest route? And can we have our insurance pricing speak to that? So it's that type of innovation that we're looking at. And that is only possible with these advancement in technology. But again, you can't create those products without having the partnership with the end client. So it's about creating a product with them in that spirit of partnership.
You mentioned scooters, Chris. I just, from Southern California, they've taken over everything. And it's fascinating.
As they have in Paris.
Yes. You talked about that. We talked about it a couple of years ago. So, but that's a great explanation. And again, for especially for the brokers in the audience, great opportunity for you to find a way to build your own niche in the risk transfer business, especially around specialty products by working with Apollo. Get a hold with any of the panelists on the line today. Come to us. You probably know a lot of us around the U.S. We'll be happy to set you up with introductions if you don't already know them. We did have a question come in about Apollo's perspective on energy extraction going forward. That's kind of a rough term I just used, but that leads me to my next question is for David. Lloyd's has recently, back in published our environmental, social, and governance report. It's available on our website from anybody who wants to download it. We're not the first to respond to that global concern about a number of very important topics for our future sustainability, but we're right in it now. And our aim is to encourage very strongly the Lloyd's market, who we're representing, to both from an investment perspective, but probably as importantly for you on the line today from an underwriting perspective, to help us get to a net zero situation over the next 10 years. Specifically, the restrictions in the market on Arctic drilling, on oil sands in Canada, as well as both thermal coal extraction and use. So with that, David, love to hear your thoughts on that because Apollo is in the energy sector.
Yeah, I mean, I think we all have responsibility doing the right thing. Yeah, it's clearly an issue and it clearly needs to be addressed. And I think from Apollo's perspective, we commend the leadership given by Lloyd's in this aspect. At Apollo, we've formed an ESG committee. That's taken from underwriters and non-underwriters across the business. We're looking at the Lloyd's guidance, and we'll be making sure that we deliver it, if not ahead of the recommendations. So Apollo supports what Lloyd's is driving, and we'll be doing the right thing. I can't hear you, Hank. You're on mute.
Never a Zoom meeting without that happening.
Schoolboy error. I was trying to keep the traffic behind me from wrecking the show. So apologies, everyone. So we've got a number of questions in, but before we go to those, is there anything else, David, Matt, or Chris, you want to touch on? We could probably go on for another hour, but
there was one comment, and it was leading on from Chris talking about technology and data, and I thought it's quite interesting. In recruitment and building out staff, I'm just seeing more and more data scientists. Probably 15 years ago, it would have been actuaries that were being recruited into the market, and now you're seeing data science as the big boom. I think Maybe 10 years ago, it was all compliance. But it's definitely data scientists with C, which is definitely driving the whole market, I think, in terms of analysis of data. See it happening.
So we've got a few. Do you guys want to go to questions, Q&A here?
Yeah.
I saw a couple in the Q&A. I'm happy to tackle some of them. Do you want to go through them, or do you want us to pick us through?
Chris, why don't you just tell us? Is it Chiefs or Buccaneers?
I did see
Tom Brady. Tom Brady. I'm going for Tom
Okay.
Brady. That's all I know.
There you go. No, go ahead.
Yeah.
You're the experts in this, so I'll leave it to you.
The enabling questions are a really good one. And how do we try to structure products that enable companies to grow? I can give a lot of examples of that in ibott. And I think it's, again, if you put yourself client first, what does a client want from their insurance program? You know, that yes, they want to obviously transfer the risk that they're not unwilling to take on their balance sheet, or they can't absorb, or they can't control. That's an obvious answer. But also within the sharing economy, insurance can be an enabler. It can help you grow. And the way that it can help you grow is to build trust. And how you talked about, how it now is just common practice to share things. Well, that hasn't always been the case, right? It hasn't always been that you'll happily stay in a stranger's house, or even let a stranger stay in your house, or jump in a stranger's car, or share a car with a stranger. All of those require a new level of trust. I think generationally, people have a different view on assets, but insurance certainly plays a really important role in creating that trust. It does need a different type of insurance product. Most, commercial insurance products sit behind the scenes, and they're very private, and they're very pertinent to that particular individual who purchased the policy. So if you're going to insure in a sharing economy platform, you need to create a product that's very simple, very easy to understand within that ecosystem, that marketplace. And that insurance product has to sit front and center so that people understand it. And then you can build that trust that people engage with the platform, knowing that if something happens, there's an insurance product to respond. And I think that is another challenge that we have to face as an industry. Is our products are very complex. Even the people in the industry probably don't read their motor policy or their home policy because it's too long and it's too arduous to read. But we need to make our products simple. We need to make them transparent. And if we can do that, I think you can see platforms in the sharing economy enable growth because they will build trust.
That's a very good point. We should get you on the speaking tour for college graduates, because those who don't is an exciting place to be, would change their opinion right away. So that's a great perspective, Chris. You mentioned simplification of products. Another Lloyd's report put out last fall was on the opportunity our industry has for simplifying the products we sell. And there's no better impetus behind that than COVID-19, clearly. So that is available on our website. I know Mark Rector has been offering links to a number of different reports as we speak. So if you can find that one, Mark, fantastic. Otherwise, it's on our website.
I think there's a simplification in the product and how it works and what it responds to. So maybe coverage and making that simplified. I actually think on the rating and how we model risk, it can only be more granular and actually more complex. But if what we're seeing now, to David's point, most of our clients now that we deal with in the sharing economy space, and increasingly in all forms of insurance, it's not a case where only the insurers have actuaries. Brokers have actuaries and data scientists. Our insureds have their own actuaries and data scientists. Everyone's modeling risk in different ways. So what we typically find when we engage the large client in Apollo is our actuaries are speaking to the client's actuaries, speaking to the broker's actuaries, and we're all having our different views on risk. And again, that discussion is a group discussion and say, how do we come up with the pricing? And I think that's really unique. And I think it's positive. It allows for that long-term relationship, because I think everyone sort of understands where that pricing is and how we came to it. So in that essence, it should be more sustainable. And again, going back to that partnership model. So I think with more data, it allows us to dive deeper into the risk, and that will come from more complex rating models. But again, if everyone understands them in the chain, that's not something that we should view negatively. I think we should actually view it really positively. And within the ibott team, I'm very much outnumbered. So we have more actuaries and data scientists than we do underwriters, which is slightly scary for me as an underwriter. But I'm learning all more about the actuarial world with every day that we operate.
Well, maybe there's a distribution question there. I don't know if you or Matt or David want to touch on that because it is evolving, clearly. Again, Lloyd's is a broker market, but there are ways to facilitate that transaction currently and going forward that will be a benefit to customers.
That's right. I mean, Lloyd's brokers are crucial to our business plan, all of us, including all, as Chris has been saying, we just have to prove value add to the process now. The more value add we are effectively offering, the more likely we are to grow in certain sectors. The more collaboration we have with clients. Chris has mentioned, I talked to all of our teams at Apollo, all the underwriting teams. They've never spoken to brokers and clients more in the last year. As that evolution goes through, we are seeing the evolution of effectively what just an underwriter is. Underwriter and an actuary and a data scientist all become merged into an underwriting team. Effectively the shop window has changed its look in that we need to have different roles to basically come up with answers to client needs and actually show the client that that's what we're thinking of and how that evolution goes. And that takes time. It takes a lot of communication. But at the end of the day, we have to be there because at the end of the day, there's a question of we discussed it previously about being an enabler. We want to try and be that enabler to help clients grow. Clients will, insurance is a product of what we're trying to offer that enables or speeds up growth of their business plans. So if we're offering that type of value add, in addition to being there to protect their balance sheet, if something happened or went wrong, then that's an amazing partnership of which to take forward, and then we grow together. And that's our ethos. That's what we try to do every day with every client.
That's brilliant, Matt. Thank you. There are a couple questions that get a little specific, and again, bearing in mind that in the U.S., Lloyd's is an E&S player, about $12 billion in 2019 of E&S premium, and also reinsurance. But to get in specifics around attachment points and perhaps specific classes of business within a transportation sector, those are some questions that came in. I'm going to err on the side of maybe cautioning you, just if you're a broker, ask Apollo directly, come to us. If you're a risk manager, ask your broker, they'll get to Apollo. It's just, we have to be very careful about how much we specifically offer because regulators go in a fine line, as they should, because we are a non-admitted market. There was a question again about the sharing economy, though, that talked about it as a potential bubble. Is it, Chris or David?
David, do you want to? Yeah, I was going to say. I don't think so, obviously, but I might be slightly biased. I think if ever there was a test of resilience, it was COVID-19 for the sharing economy. When you have a pandemic and a horribly infectious disease, sharing an asset doesn't really go together with that sort of pandemic. And to see some of our clients demonstrate the agility they did, specifically within, ride sharing, delivery, accommodation sharing, micromobility, and to see them come out the end and come out the end of what I think even stronger is unbelievable. This isn't confidential; it's completely in the public domain. But seeing Airbnb, with their homes and their experiences, quickly move to a virtual experiences model, whereby they can connect people to do things when you're locked at home, and you can have, a professional US Olympian do a fitness session for you and have those sort of things. We in the ibott team did a sort of artist class as a team to have some form of sort of corporate entertainment. To watch a company, that sort of transformation in that sort of time is unbelievable. And I think that's a testament to their ability, because they're tech enabled, they're sort of asset agnostic, they can have that sort of flexibility. And that's why when you insure them, it can be a challenge. They're so dynamic. By the time you've created one solution, they already want the next solution, the next fresh wave of innovations. And that's the gauntlet that's thrown down for us is, they're constantly going to need insurance. Insurance is pivotal to their business, of course. So I think whilst the ibott and the Apollo products are probably at phase 1, maybe 1.5, I'm being really generous, maybe phase 2. our challenge now is to take them to phase 3 and 4 and keep up with that fresh wave of innovation. So, when competitors ultimately enter the market, because at the moment it's still pretty limited, still niche, if they enter at phase 1 and 2, Lloyd's are already on phase 3 and 4, it's a differential for us. I see the sharing economy getting stronger and stronger, just in the way that we're generationally changing.
And it's enabling people to have different careers. The drivers, the people delivering products, the people that can manage their own diaries and do 4 or 5 different roles during the course of the day, whilst taking the next day off for family needs. It gives you a dynamic way of working, which when I started out in my career, that wasn't available. You went to work 9 to 5, which never, was always more than that. So I think that push from society to give those the ability of having that alternative will also drives it as well.
I think Chris's comment on generational change is probably the most relevant.
Yeah.
If we ask our children, do you think that's a passing phase? They'll just look at us and think that we're very old. So.
Very good point. Yeah, and to Chris's point earlier, if you're just one day, or Matt's point, if you're working one day a week in a sharing economy, gig economy biz, and you can go online once a week and buy your coverage to enable you to go into that business safely, fantastic. We're all about that. I know we're coming up to about 8 minutes to go, so I just ask one last question. If there are any others in the audience, please put it in the Q&A. There are a few.
The one thing I would just add before you go into that, and I think you just triggered a thought and something that we should say to our broking partners and any insurtech clients that might be on the panel. I think there's a huge opportunity within the sharing economy and all lines of insurance, in my opinion, to sort of potentially flip that distribution model. No more so, I'd say, in the sharing economy, because like you say, when you've got these gig companies looking to do different aspects of different jobs on different times, they want that usage-based product. That's very different. And I think there's a huge play for insurtech companies within that. And actually the platforms themselves may even consider to become a insurance broker or even an insurer, and offer the products direct at source. And I think one thing that's brilliant that we probably don't talk enough about, but hopefully everyone on this panel is aware of, it is the Lloyd's Lab. That open door policy that Lloyd's is willing. If you've got an idea, might not have all the answers, but the door is open to collaborate in Lloyd's, to innovate within the building, have access to all the underwriters. Plenty of Apollo underwriters have been mentors. I know a lot of syndicates, really support it. It's a fantastic opportunity to be an incubator for those type of insurtech solutions that are going to help modernize our business. Just wanted to put that in there.
Yeah. Back to, as insurers, and certainly for us, we don't invest a lot of money into building our own insurtech, because there are so many people out there doing it that we would love to partner with them to actually then offer something that's different again. So again, that's again back to trying to build something that we might not have, but partner with something else, and then to have something at the end of the day that hasn't been offered before. And that could be through the lab, that could be direct.
Yep.
Doesn't matter.
Thank you for mentioning the lab. It is on Gallery 5 in the Lloyd's building there on Lime Street in London. But immediately after we all went into lockdown, they transitioned towards a completely virtual approach. They've run a couple of cohorts. They've run their pitch days. They've done everything as they would have face-to-face seamlessly virtually. So it's proof of how it all can work very well. It's not ideal. We all want to get back to seeing each other, but in the meantime, we're getting it done. So, all right, one last question for the group. How are Apollos seeing the future use of microsatellites and expanding risk modeling technology and other risk management and insurance products? There's a lot there.
I'm looking at Chris.
Oh, great.
We need our space team. We need our space or aviation team on. Well, actually, it's technology that's going to be that offers solutions to a whole load of problems, be it network compatibility, into building internet connections around the world to areas that don't have it, the expanding responding. I mean, looking at the question there, I mean, the answer is very important, and it will evolve, no doubt, because technology and demand for those products is there. So it's just a matter of time.
Yeah.
Future.
As a subscription market, you and the Lloyd's market work with many other syndicates, managing agents, and brokers in London. And what you're all learning separately, you bring together to the benefit of the market. So that question can be answered by a lot of different people in that marketplace, but ultimately it's through the collective effort of all of you that bring this to the world. So
yeah,
it's a good question. It's probably a longer answer than that, but thanks for asking.
100%. Yeah.
Yeah. So at that point, so we've got about 4 minutes left. I'm going to pass it back to Pat Talley to wrap this up. But again, I want to thank everyone for joining us today. I want to thank David, Chris, and Matt, terrific partners of ours in the Lloyd's market. We all look forward to hearing from you with any questions you might have after today. And Pat's going to take it from here. So thanks again. Stay safe, everyone, and see you soon.
Thanks, Hank.
Thanks, Hank. Well, and there you have it. As Hank said, I'm sure we could have easily filled another hour, but for now, we'll just call it a day. Be sure to join us next Tuesday, the first installment for February, when we'll host the second edition of Syndicate Showcase, this time featuring Aegis London, which operates Syndicate 1225 at Lloyd's. Joining us from Aegis next week will be CEO David Kroom Johnson, Alex Powell, the Chief Underwriting Officer, and Nigel Roberts, Head of Distribution. Our moderator will be Haley Spink, Head of Market Development Transformation at Lloyd's. When the session ends today, a brief 3-question survey will pop up on your browser, so please take a moment to fill that out as it helps us in our future programming. Again, we welcome your comments and suggestions, and you can leave feedback on the survey or drop us a note anytime at usevents@lloyds.com. So let's keep staying connected, and until next week, goodbye and have a great rest of your day.